Greetings, my YouTube family. Thank you so much for visiting my channel. Today, I'm going to do a review of Toronto Dominion Bank, commonly known as TD Bank, and I want in particular to see if it is a good stock to invest in. I had a conversation with one of my followers on Twitter, and they asked me to do a review of this in my usual weekly videos. But before I get started, I do want to disclaimer that this content is meant only for educational purposes, and as such, it should not be taken as investment advice. And I'm going to quickly go through what TD do, TD Bank does as a bank, and also their earning highlights, and do a quick financial deep dive before I can give my opinion on whether it is a good investment worth investing my money. But for those who don't know me, my name is Isaac Jonas, and I'm pretty much an academically trained economist. But I like to create content like this because when I started investing in 2020, I didn't have readily available information. So I think just sharing my experiences, my wins and my losses, probably it might be able to help other people to avoid the mistakes that I've made. So that's why I create this content. So Toronto Dominion Bank, actually they are commonly known as TD Bank Group, and it's a Canadian multinational banking and financial services corporation that is a headquarters in Toronto, Ontario. And they actually were founded in 1955, and through a merger with the Bank of Toronto and Dominion Bank, they uh, then it was then created. So you can read on this, but what is key is that it focuses on um, the Canadian retail banking, US retail banking, and wholesale banking. So it is both in Canada and the US. So in the US, it's mostly in Maine to Florida, with strong presence in the Northeast. Actually, when I went to Portland, I think actually that was in New York. This year I was surprised to actually see TD Bank. So that was something that is interesting. And it's one of Canada's actually the top two banks. There's TD and also CIBC. But at the end of the day, I think generally the Canadian banking sector is well regulated, so it doesn't really, for me, it really doesn't scare me to invest my money in the Canadian sector, because when the financial crisis happened in 2009 in the US, a lot of banks, they went under a lot of stress, but the Canadian sector, it really remained resilient because of these stringent measures that I see. Even if I'm opening a brokerage account, there are lots of things that they do, and I don't imply that in the US they don't ask those questions, but I think I just like the fact that even when other banks are really crumbling in Canada, usually they are stable. So when I look at the main things that I look at, a snapshot, I look at if I look at the 54, 52 week or the year high, it went as high as 87.1, and I'm recording on the 5th of April 2024, and it was as low as $75.89 about a year ago. But when I look at the return on invested capital, I see like about 4%. But I like to see the return on equity about 9%, just about the S&P 500 return, so which is also diversified. So this is just one individual stock. But I like that they do share buybacks as well, which kind of like basically can potentially cause the share appreciation if the number of shares, if it was fixed, and then the amount of outstanding shares in supply is reduced, so it's basic demand and supply interaction, and they have a very good dividend yield, and that's something that I would possibly consider this investment for. But in terms of their past earnings history, TD Bank, they are scheduled to announce their earnings for April May 2023, so a couple of weeks from now. But in January this year, they did beat the earnings. This was, I think, the Q4. earnings, but they did beat their earnings, but in October they missed. So you can see that they are inconsistent here. What I also noticed is that I got this on Google Finance, but this tool that I use, the Ru1 toolbox, it also tells me that there's going to be an earnings call, right, to analyze the quarter earnings results for 2024 on May 24th. But this is important to listen into if I want to consider investing in this business. Now, I do a deep dive usually the past 10 years for any stock that I want to invest in, except in ETFs, but I like to also see their history. So you can see that here, if I look at the income statement, the net income for common holders here, it has been growing, right? So which is something that is positive. Net income basically. And when I look at the balance sheet, when I look at the long-term debt, the liabilities, you can see that here the total debt, it has been going uh, up and down. But the way that I analyze a bank is different from an individual stock, because a bank, in terms of how they make money, is they get money from depositors and of course other ways like charging fees for the services they provide, but they then loan it out for an interest. So it's different, right? In terms of the liabilities, when I deposit money in the bank, they take that as a liability, but they can loan it out, right? So to me, for me, that's how I look at it, right? So I like the fact that they have dividends, but also when I look at the free cash flow, I am concerned that they are very inconsistent. You can see here there were some years when they had like 230 billion here. That was 523 million here in terms of the money that was in the red, and also their most recent one they had like 92 billion that was in the red. So the free cash flows, they are inconsistent, right? So for me this is a red flag, but I then do a deep dive to analyze and see if what was the reason for this. Was there a capital expenditure, right, that they undertook to, so that it's kind of like dwindled all their cash in that regard. So in terms of the inside trades, I didn't find any, even the most recent one. But when I invest, I like to invest in companies that dominate in their sector. So I can see that here TD, they actually have a pretty good mod score here. You can see here, out of these that I see, the Toronto Dominion Bank here, but there's also the one in Canada, right, and the US. But I can see that when you compare with other banks here, RBC actually has a bigger moat than them. That is another Canadian bank. So I kind of like the fact that they have that. But I also look at the management score and I compare it. You see, JP Morgan, it has a good management as well. They manage their finances well. You can see the return on investment here. JP Morgan is ahead of this. So I would definitely consider even the positive cash flows. So I can see on this score, if I want to invest in a bank, because most banks, I know they offer dividends, I can definitely consider to look into JP Morgan and Chase. This is a very interesting one. And then Bank of America as well. It's a big corporation in the US, but for the Canadian bank side of things, I think TD is also one of the most dominant ones. And you can see that their mod score, I have explained this, but the Canadian banking sector is generally well regulated and they do offer dividend, which is good. So if I want to get some dividends, whilst my capital appreciation is preserved, or even hopefully it's there's some growth there, I would consider investing. But I would do a deep dive even beyond this to analyze, this even further. But this is just the preliminary thing that I do. But currently the shares, they are around above $80, but I would kind of like wait. Maybe if they go to $60 a share, I might consider them, but investing in this bank. But the thing is, usually there are some events. Let's say Bank of Canada, they don't increase their interest rates as anticipated, or there is a major economic macroeconomic issue or geopolitics and the stocks there's a sell-off, for me that's a good opportunity to consider getting in. But out of all the banks, I would consider other banks as well, Bank of America, Goldman and JP Morgan and other banks as well, because at the end of the day I want a higher return on my money. But TD, it does offer a good particularly for my Canadian side of things, because if I invest for the Canadian stock exchange, Toronto Stock Exchange, I can just pay Canadian. So in terms of the exchange rate conversion to the US side, then that can be a good thing. But also, like I said, it's well regulated here in Canada, so I would consider that. But at this current price, I wouldn't, unless maybe if I just want some dividends. But also, if I look at other things, like they've missed some earnings, they've inconsistent cash flows, it kind of makes me cringe a little bit. So I kind of like would consider investing in other banks, maybe, unless they really discounted at some point. But it's a good bank. It's a good bank from my experience. So I thought I would just share this with you. And if you are interested, please consider subscribing and watch other videos that I've done for other stocks, individual stocks and ETFs that I invest in. So thank you so much, and may the markets be with you. Have a wonderful week ahead.